Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go. Good morning, everyone. Today is Friday, September the 26th. My name is Anne Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. We have today, Monday, and Tuesday as the last trading days of September. Those are normally, wiggly days. That's the technical term I'm using anyway. So let's have a look at what's been happening overnight. So let's take a look at yesterday. Highest volume candlestick of the day in the beginning of the day, not the end. So this tells us that institutions are not completely liquidating at the end of the day. What does that mean? Well, it might mean that there's anticipation of further downside pressure. And so that's what we're staring ahead. The put wall has moved down dramatically. It's now at 6,600. The call wall is at 6,690. Okay, so 6,600 on the bottom, 6,690 on the top, and we're sitting in this accumulation stage, right? We've got a lot of inventory accumulation right here. If we clone this box and we move it down to see the multiple, we can see that they're holding a one-to-one, right? In general. Of course, you're going to see wicks. Wicks are to liquidate and get better pricing to move up into the range. I'm going to make this duplicate another color. I don't know. Let's make it. I don't want to make it that bright. I'm sorry, folks. I just get caught in the weeds sometimes. Yeah, we'll do that. Okay, so what we're seeing is a battle between price action that's around the 66.50, which we measured yesterday, and 66.73. What is trend? It's down. What is momentum? It's mixed. What is the VWAP? It's flat. That tells you it's in a range. And so why does it tell you it's in a range? Because there's a cross current of information. Some indicators say sideways, some indicators say down, some indicators say up and down. That's mixed. And so when you've got mixed price action, you're going to be trading a range. Low end of the range, 66.50. High end of the range, 66.73. What are the traders trying to do? Well, they eventually want to leave this pocket of inventory accumulation. Now notice, last 30 minutes of the trading day, fair bit of volume, it's showing up as a minor resistance. But if we just take that box and clone it, it's going to give us almost exactly that one-to-one, right? So this is an example of what you see when the trading is very algorithmically driven and they're waiting for a break to force the motion into distribution or liquidation, right? Right now, they're in accumulation. What are we doing? Well, we had lows, then we have a high, then we have a higher low, then we have a higher high. Now we've got a higher low. Is it going to break to the top of the box? Notice the low volume sitting here in the volume profile. Also something to watch, right? So what is the storyboard? Well, it's Friday. And Fridays in the year 2025 have been usually very bullish. Usually very bullish. The line in the sand is going to be the high of our 4 a.m. candlestick. If we get out above 6,673, which was relative resistance yesterday, and truly the high of the intraday, the high of the intraday trading day is the 66.75 that we know. If we break it, we're going to go up into 6,682, and then we're going after the call wall, which is 6,690. If We make a lower high here. It's going to follow in trend, and it's going to collapse back into the box because the VWAP is still sideways. Now, I'm using words like going to, should, whatever. We all know that on just a mouse click, anything can move rapidly. So manage your risk. If you're saying, hey, my belief is that nothing's going to keep this market down, they're going to try and move it higher. I'm setting my long for somewhere around 66.51, 66.52. I know that these wicks here at 66.46 going to be my floor. You manage your risk, you assume the risk, and then you take the trade, right? If you go, gee, I hope it doesn't go down there because I don't want to lose, you're going to end up hanging on to a trade, and that's going to be very bad. Value area low, 6,635. Value area high, 6,715. That's the floor we're looking at. Generally sideways, a lot of inventory accumulation here. Let's see why. Personal income and outlays at 8:30. Consumer sentiment at 10. I don't know that those are real things for us to worry about. But whatever. They could be just seeing who blinks first, right? Today, we begin the trading day at negative 12,000 cumulative delta. So they're going to want to work that off, but they'll probably try to step on some necks, head down to the put wall, and then we see another reflexive action event. Okay? So if we want to draw Fibonacci for the first 30 minutes of the trading day, it's going to give us, of yesterday's trading day. You could also do it for today's trading day when it absolutely comes in. It's going to give you a good idea of where things move. That's what we're staring down. You can look at that 6,600 right there at the put wall. VWAP 6660, and we're dancing around it. Very high point of control, sitting right on top of each other. I'll talk to you about these trend lines some other time, but this broken one is the second trend line that we've broken that was upward. This will be the third trend line break. I'm going to show you how to draw that in the NQ. Just for grins, since some of you are, fans of trend line formations. So what I'm going to do is I'm just going to get rid of these guys. Come on. Remove all my rays. Yes. So here's what we're going to do. Just going to connect two lines, 2 points, right? 2 points. I got to turn this back to white. All right. So we're just hitting two lines together, letting the ray go out. That's a very deep trend line. Then we have two touching these guys. That's another trend line, right? And then, I don't know, maybe we take these two trends, right? And then our next pocket in the near term, we'll use these two lines. Okay, so very steep upward action, very, very steep. Coming down into baseline support, we talked about this yesterday, this 24,500 area being important, as well as 24,450 ended up being a fantastic buy zone, right? Buying pressure and selling pressure almost the same. Okay, pretty important to see. A lot of bullish momentum. Moving average still very far away. Okay, 4 hours. Looking at the same thing. We can make this just a little bit more. Yeah, let's leave it. It's fine. 4 hour formation shows mean reversion, trend up, heavy congestion, right? This is an accumulation space in the chart sitting inside of the biggest volume box of the day. And notice this. See the sellers? They came in and they went, no, sir. No, you don't. and they slammed it down at 24,691. That's going to be the line in the sand to beat. If it gets above that zone, they're going to try and start creeping up into these larger areas. Notice, let's see where the put walls are. Put support right down here, right? This is the green line. That number, 24,500, same as it was yesterday. Call wall, 25,006, same as it was yesterday. Okay? Series of lower highs and lower lows. They're trying to hold the bottom. They went here. They were like, listen, last time we ran like the wind from here. Let's do it this time. So that's what they're trying to do. They're going to use recent past to predict the future. It's what traders do all the time. And right now, they're in the patience game of saying, all right, let's see what we can do. Get up over here. We'll be back in business. We lose the edge. We're going to have to liquidate. And if we liquidate, we've got these lower edges now sitting. I'm going to move this number to this consolidation space near 24,330. And notice the stair steps of consolidation. Inventory accumulation, distribution. Inventory accumulation, distribution. Liquidation. Right back into the old area. So that note from Coach Jack that he gave me so many months ago that said, hey, they're going to go to where the volume is at. And the volume is created by this consolidation pocket, right? It's where they accumulate inventory and then decide they're going to distribute or liquidate. All right, and that's what we're waiting for right here. So trading right in the middle of this zone, not really something I would do. Just saying. All right, so let's take a look at what's happening here, pre-market, relative to yesterday. Price action holding a key trend line. So I'm going to make this one red. Key trend line hold. Now, highest volume candlestick. Somebody asked me once, hey, does it matter if it's bearish or bullish? No, it sure doesn't. It sure doesn't. It's just the space where they go. This is where we are going to say price action has got itself a move in this space. All right, so this is kind of wide. I'm not sure it gets to the top of this, but we're going to clone it, move it up there. It doesn't. Notice this also typical if it's done in the pre-market. If you come up into the prior day's trading high, regular trading hours, you come into that high and you fail it, it makes a great short, particularly the first time that it happens, right? So note to self, put that in your bank, in your mental bank, and say, all right, I see what's happening. Now, let's take a look at the high of the 4 a.m. candlestick. I'm going to use, instead of the 4 a.m. candlestick, I'm going to use the high of the 30-minute candlestick because that is where they literally came in and just pumped the brakes on it. And that's 24,664. If they breach it, because price action is still sideways, they are likely to have a wicking formation, and they could give us some sort of megaphone until it moves back again. We are in range and in value from the prior trading day, so we're caught in a bit of a peat bog, as it were. The low edge, the pre-market low they're going to be watching, is this top of the 30-minute candlestick from yesterday, and that is 24,575. Okay, Fridays are normally bullish. Who knows today? I'm just looking at, all right, here's where they're building volume. They break out, they're going to distribute. Where could they distribute? Call wall all the way up at 24,816. Put wall remains 24,500. That tells me the traders are still trying to buy the dip. And so not sure if they're going to get caught off sides or it's going to continue to run. I'm going to be using cumulative delta to help me decide what these traders are actually doing. And if cumulative delta begins to decline rapidly We know that they are unwinding their shorts, and that's going to push us higher. Okay? All right. Let's go to gold. Oh, gee. What is this, a 3-day mosh pit? Let's go to the daily. It definitely is caught. Call wall, 3,792. Put wall, 3,718. Stabilizing here, right? Remember, financialized instruments are going to unwind in the same direction as the market. If we were trading a live instrument of gold, it would work quite a bit differently. And the futures are probably influencing spot. So we could start seeing a pretty wide disconnect. This is still a buy the dip formation for you gold bugs. Nothing telling you to trim. Getting underneath the put walls at 3,720, that's going to matter. All right? Second highest volume event of the day sits right at value area high. We are above value area high over the last 1, 2, 3, 4, 5, 6, 7 trading days. And so this is generally something someone might say is a continuation of distribution. However, I'm not of that mind. I still believe that a retrace of this very high volume pocket here, once they got out of this massive inventory accumulation event, let's see what it looks like. Let's draw a box and see what the one-to-one gives us. First of all, yes. All right, so let's draw the box. I don't want to get too many of these wicks in here, but I think that ought to do it. Old resistance, new support. This is the box. So let's clone it, move it over here, and we can see that we are right at the top. Right at the top of that box. And so I suspect we might have a little bit more of a fade coming, but breaking out over the call wall can bring us dramatic buying. This is a 0 DTE call wall here at 3,800. 3,900 is the call wall for the weekly and monthly options. That's bananas. All right, get to the 30-minute chart. We can see it's pretty noisy. We had pressure here. It's holding just fine, right? This morning event gives us sideways action from the high volume candlestick, right? We got 2 high volume candlesticks, but this midpoint right here at 37.73 gives us a pretty nice buy space. So this obviously is consolidation, but remember, instead of the word consolidation, what we want to use is the word inventory accumulation, because it reminds us of the laws of supply and demand and what the traders really want to do here. They either want it to break down if they're positioned short in this wedge, or they want it to break out if they're positioned long, but they don't really care because they can flip and move in the direction. They just are accumulating with everybody else until it breaks, and then they're off to the next area of accumulation. It is my suspicion that we'll stall out here at the VWAP, and the VWAP is 3,787. If I'm wrong, we'll break out, pull back, and then break out again. Why? What are the slopes of the moving averages? Flat. What's the slope of the VWAP? Flat. What's the range of motion? Inside range and inside value. What's momentum? Flat. And so this is telling us sideways pressure in here. You could find some pretty nice trades, but you want to be very careful about holding for a big run or holding for a big run to the downside. Lastly, let's take a look at SPY. My SPY short calls been doing well for several days. I would like for them to do well today also. But what are we seeing? All right, we've had downside pressure for 1, 2, 3 days. That's as long as it's been for a bunch of times. The big put wall, $655. We are above it. The 0 DTE put wall is 660. We're below it. What does that tell us? The 0 DTEs, they want to push it up into this space. They absolutely do. And so if they can't, we've got ourselves more downside pressure. So you want to watch for whether we get up and over this pre-market high, which is yesterday's high, and that is $659. That's going to give us the tell about what we've got going on. We still have a little bit of seasonality left. Yom Kippur does not happen until October the 2nd, I think. So we got a couple of days of that. I don't know if it works or not. I'm just saying, hey, this is it. Use the data, throw it out, whatever you want to do. But if we get above this 659.50 and we run into 660, holding above 660 and 50 cents puts us back in this inventory accumulation space, which could send us to the VWAP, right? Anything can happen here, literally. Anything can happen. Pullbacks, they're buy zones, but they could be deep. Big spikes are sell zones, but the spikes could be very big. Essentially, what the chart is trying to do is find a floor. And look at what's been happening the last couple of days. Definitely buyers coming in here to defend. But we still are making lower highs. And so if we cannot get up over this inventory correction, I think we head down into this one, right? So that's it for me. Hey, listen, take care, everybody. I'll see you on the streams.